Good afternoon, everyone, and welcome to the inaugural Velez and Sons Mortgage and Real Estate Podcast. We are live from the beautiful city of La Habra, California in sunny Orange County, and my brother and I are both very excited to begin this podcast journey. Our goal with this project is to inform and educate the general public on frequently asked and not so frequently asked questions in the world of residential and mortgage real estate. So, who are we?
Velez and Sons is a family-owned and operated company with over 35 years of combined industry experience. Now we're going to start with some brief introductions, starting with JC, my brother.
Hello again, everyone. My name is JC Velez. JC is for Juan Carlos. I take after my father, who's the chief Velez in this operation. He's been in the industry for over 25 years. He's both personally taught my brother and myself everything we know about the mortgage business, the real estate business, and he's been licensed since 1996 and been working the Southern California area ever since then. Myself, I'm the firstborn son of Velez and Sons. I've been working with my father since 2015, but I've been learning from him all my life. On the personal side of things, I'm married. My wife and I just had our first son, as you know, 4 months ago. So it's an exciting time for us professionally and personally. And as far as the introductions go, last but definitely not least, here's my brother Thomas.
Thank you, JC. I appreciate it. So to all the listeners, my name is Thomas Velez. I'm 22 years old, and I'm the final member of the Velez and Sons trio. Ever since I was a little kid, I've always, I've looked up to Dad and everything that he's done. And I went to school at Sonora High School over in La Habra. And then I did a brief semester at Fullerton College before realizing that I wanted to do real estate full time. And at the age of 19, I got my real estate license.
So the question that everyone asks us is, why did we come together to form the team?
Yes, sir.
Now, we were all working for ourselves. Dad was the one that started. Then I got started in mortgage, and you got your real estate license. But after the COVID pandemic, we realized that it was probably best for us to combine our efforts, our minds, our knowledge, and bring customers and clients a more personalized customer experience. Yeah. Because in real estate, a lot of times you're working with a big bank, and instead of seeing you as a client face to face, they treat you more like a number. So with us, you're getting a team of not one, not two, but three people that know how things work on both sides of real estate transactions, of mortgage. And we are also, driving forth that family-owned, independently owned, operated is best when it comes to personal attention, customer service. Quality. Because as far as people with restaurants, they don't want to go to a big chain restaurant. They want to go to the mom and pop,
the good stuff,
the good hole-in-the-wall places where they're going to have the personal attention. The owner's going to come by, say hello, tell them a story. Even when it comes to auto repair, plumbing, you want someone that you can trust, someone that you've been working with. Dad's clients have been with him since the beginning, and now their children
get to work with us.
Yeah, so we're big on that, of lifelong relationships with clients.
Of course.
And also, as far as home ownership in today's market, it's tough, but it's a dream that we want to help people realize. And that's why I'm in it. What about you?
So I think the good part, everything that you just said, family owned, especially during today's day and age where there's so many different companies, so many different things. What's really going to set us apart from, your big corporations, all the big real estate companies. So, just really driving that point across that at the end of the day, people want to work with someone that they can trust, someone that they feel safe around. And I think the trio of us, that's our goal. And that's more important than any dollar sign, is just hammering that service, being good people and driving home good service. But, the big question, inaugural podcast, what's the topic of today's episode?
So today's episode, we're pretty much going to focus on the state of today's market. How did we get to where we are right now? Everyone knows that house prices are super high.
Ridiculous, right?
Interest rates have been pretty low for the last couple of years, ever since COVID started. So how did we get to this point?
So let's rewind to March of 2020 when, this crazy pandemic started.
So in March 2020, as everybody knows, the economy pretty much hit a halt.
Yeah.
Everything got shut down. Restaurants, bars, travel,
nightlife,
anything you can think of as far as the economy goes, it was kind of at a standstill. And people were nervous. People were scared because they didn't know how long this was going to last. At first, they told us a couple weeks. A couple weeks turned into a couple months.
A lot of disinformation.
That turned into a year. There's a lot of information coming from the media, from politicians. So because of the lack of job security, people were kind of in the dark as far as what's going to happen to my income. Am I going to get fired? I can't go to work anymore. And I don't have the ability to work from home. So what happened with the market was a lot of people decided that they needed to hold on to their home.
Yeah, of course.
You know, it's the most important thing for your family, right?
Yeah.
Roof over your head. So they wanted to hold on to their house because of the uncertainty. So what that caused is the market all of a sudden shifted to a seller's market. Why? Because inventory went way down. The number of homes for sale, plunged.
But what does the seller market mean, JC?
So a seller's market is one where it benefits the seller versus the buyer. Why? Because supply and demand. Supply is low, demand for homes was high. So seller's market, and that coupled with the Fed's slashing interest rates to historic lows. We're talking the lowest they've been in like 40 years.
40 years?
So 40 years coupled with low amounts of homes available. There was only a select few people that could take advantage of the market. People who knew that, hey, you know what, my job is transferring to work from home. I'm good. I can take advantage. Now, because a lot of people were afraid to sell their house, they benefited from the refi market.
The refi market?
So,
what do you mean?
So since the interest rates were low, they decided, you know what, I got to take advantage. I'm going to refi. I'm going to lower my monthly payment. I'm going to cash out some equity. I can pay off some debts. I can maybe do that home project that I've been putting off for a couple of years, renovations, things like that. So all of a sudden it turned to a seller's market on the real estate side and a boom when it came to refis.
So, just for our listeners, is a refi safe? What does that exactly entail?
A refi is safe depending on what your goals are. There's different types of refinances. We're talking about rate and term refi. What does that mean? Let's say you have a 30-year mortgage, but you want to pay off your home in 15 years. So you can get a lower interest from the bank. And they incentivize you wanting to pay your home in half the time. There is debt consolidation, which is a cash out refi. A cash out is that you're taking money out of the equity you've built in your home. And you can use that to remodel, to do a home project, to pay off debts, credit cards, a car that has a high payment. But as a lot of people have heard, at least in 2022, is that interest rates are on the rise again. Now, why are interest rates going up again? I'm sure you've seen it. Gas prices through the roof. Domestic goods, there's the supply chain issues. Everything is more expensive, not to mention rents. So to curb the inflation that's been rampant for the better part of the last year and a half, they're going to raise the interest rates. Now, how does that curb it? Because if the interest rates are low, people have a better ability to qualify for a more expensive house. Because lower interest rate equals lower monthly payment. But if all of a sudden the rates jump up again, then your ability to qualify for a more expensive home lessens. Because all of a sudden it's like, well, that house is $1 million, but the interest rates are now 3.8 instead of 2.8. So my monthly payment would have jumped from $3,000 to $3,800. So now the bank is going to qualify me for less. Instead of $1 million, maybe I qualify for $850.
So does that mean that there's going to be an increase of volumes in how many homes are available on the market?
There could be. Now, if the rates increase to pre-COVID levels, maybe we could see more of a shift to a more buyer-friendly market because of added inventory. But again, look, we're almost 2 years into the COVID pandemic.
With no
how many variants have we gone through? The Delta variant, right now the Omicron variant. So there's still uncertainty and a lot of people are still unwilling to sell. Now, the question that a lot of people ask, it's the most maybe common question for realtors, agents like yourself. Is it a good time to buy?
That's a very tough question that you can't scope down to, one answer. Just like in everything, it comes down to a case-by-case basis. So, to put it in the simplest terms possible, I would say if you're financially able to, of course.
Right.
You know, because as you brought up before, nobody wants to give money away for free, which is what, with rent, especially living in California and SoCal, Orange County, LA County, rent is through the roof.
Now, we're born and raised in Southern California.
Yeah, correct.
We've been living in North Orange County for the last 20 plus years.
Yep.
And so we see a lot of people come up to us and say, hey, you know what? I'd love to buy. My rent is now $3,000 a month.
It's ridiculous. It's ridiculous.
But the housing market does seem a little unfriendly because a lot of people will say, hey, you know what? I make $120,000 a year.
Which is a good living.
That's a great living. That's a great income. You're way above average for the country. They say I have low debts and I saved $50,000 for a down payment. You say, fantastic. That's great on paper. But then they go into a market, like an Orange County market, and they realize that they're getting outbid by $50,000, $60,000. So that money that they saved for years for the down payment, that's what they're getting outbid by.
So that's a turnoff for a lot of people, correct? So, you know, as I said before, if you're financially able to, obviously it'd be a really good time. But if you're one of those people who you're kind of on the fringe and you don't know whether you're gonna buy or not, you know, one thing that we pride ourselves by is being honest and telling the everyday consumer, you know, something that might not be the most popular opinion. But if you're one of those fringe people, I would suggest waiting a little bit. You know, maybe saving up some time, saving up some money, and then wait to see where the market shifts. Because, you know, the market, no one person can know where it's going. And especially when everything is dependent on how COVID's going, how all those variables are heading, you know, that's where the market's going to lean towards.
Right.
So would you say right now, what would be an ideal case for someone to buy?
If someone is looking to buy, let's say they're living in North Orange County, but let's say their work situation is that they can work from home and they have the flexibility to move around.
Okay.
So they say, you know what? I've been living in Orange County, but it looks like I'm being priced out of this area.
Yeah.
But I'm willing to take myself, my family, and move to, say, the Inland Empire.
Okay.
Because I don't have to worry about a commute. I'm working from home. So they can sell their house right now, top of the market, get the best value possible, and they can move to, say, Menifee, Winchester, Marietta, Temecula, and find something comparable, maybe even bigger, for less money.
So how big is the discrepancy between the Inland Empire and Orange County?
You know what? It's a pretty big discrepancy because you're looking at average house prices in North Orange County being Wahhabra, Brea, Fullerton, Placentia, Yorba Linda. You can't find anything of quality. If you're looking for a standard 3-bedroom, 2-bathroom house for anything less than $800,000.
$800,000.
$800,000. Now, as an example, we have a family member that bought last year, or a year and a half ago, right? September 2020 in Winchester. 5-bedroom, 5-bathroom house for $525K.
Great price.
Great price, big house. That house is now worth $660,000, $675,000.
In only a year and a half.
In a year and a half, his equity jumped to $150,000. So our father also has a tip that the best time to buy is when you're personally ready to buy. Now, conversely, another question that we should ask is it a good time to sell?
So I think that question ties into the one that we just spoke about. You know, it depends what your goals are to do. So if you have a house in, you know, Orange County, LA County, you're going to sell for top of the market right now. As we mentioned, it's a seller's market. I've had multiple transactions to where, you know, I'm getting outbid because there's over 20 bids on that one house. So is it the right time to sell? Short answer, yes, but it depends where you want to move to. Are you looking to upsize? Are you looking to downsize? Those are all very realistic questions that you have to ask yourself. So if you're looking to sell, to buy another house in Orange County, if you're looking to downsize, it's going to be a great option. You know, you're going to have a lot of offers. You're going to sell that house fairly quickly. And the only, you know, caveat to that is if you go and you're looking to upsize, you know, you're going to get burned by a lot of offers. And you're going to have to place a lot of money over asking price. You know, you might even have to waive an appraisal contingency, which a lot of people don't want to do. But if you want to sell and then go to somewhere like the Inland Empire, if you want to go to another state, you know, now would be an amazing time.
Now, we should touch on the out-of-state thing. We know a lot of people that are moving to Tennessee, to Idaho, to Texas, because they're coming from the perspective of, I can't afford California anymore.
A lot of people think that,
California is just way too expensive. I'm too, squeezed for money. The pressure's too high. So I'm going to sell my California home for top of the market value and go to Idaho and buy a 5-bedroom house for $200,000-$300,000 less than you would find here. So if you're one of those people that's willing to move out of state, that your job allows you to do so. If you're someone over the age of 65, you're an empty nester or you're a retiree, and you say, you know what, I don't need this 4-bedroom house, this 5-bedroom family home that I've been living in. Cash in, and you can look at a condo, you can look at a retirement community, and you can reap the benefits of all the equity you built over the last 10, 20, 30 years.
So another question I wanted to ask you, just tying into some of the stuff we talked about earlier, what are some of those fringe cases? What's a case like that look? And why would someone go with us instead of, let's say, a huge bank?
Now, a lot of people will see advertisements on TV and the radio. Hey, you know what? There's a cheap interest rate right now. Go on our app, punch in your information, get pre-qualified in 10 minutes. Now, big banks like that, they're looking for a person with a credit profile that's almost perfect or pristine. Someone that makes a lot of money, whose debt to income ratio is relatively low, that doesn't owe something, good credit score. And sure, maybe you can get qualified, but there's people whose situation is different. You have people that are self-employed. People whose income isn't steady, where you have to take an average of their income. People that own a business, people that are 1099, independent contractors, people with Schedule Cs that own their own business, their taxes are different. They're not as easy to qualify. So it's a little harder for those big banks to give you a yes or no. Now we'll sit down with those kind of people and we'll say, okay, let's look at your credit profile. Let's look at everything from A to Z. How long have you had your business? Why is your credit score like this? And we're gonna give you some financial advice. Hey, you know what? Maybe you're not ready at this time, but we're gonna, rearrange these things. We're gonna work with your CPA so that your taxes are up to snuff. That way you qualify in the next 6 months or the next year, because not everyone is a W-2 employee with a lot of income and no debts. But that doesn't mean that your dream of buying a home or refinancing your home is impossible.
No, I mean, I think that's a really good point. And what would you say to someone that, they're a first-time home buyer and they're really nervous about the process? Real estate's kind of intimidating. A lot of people don't have a lot of background knowledge, and, a lot of people, frankly, want to be walked through the entire process. What would you say to a client like that? So we do get a lot of clients like that, and we'll sit down with them, we'll invite them to our office, or we'll even make a house call, and we'll walk them through the process. Now, there's a lot of people that unfortunately don't know anything about real estate. You see it a lot in immigrant families. First generation children that were born here whose parents don't know much about credit scores, about how to have a good credit score, how to keep your debts low. Legality, all that kind of thing.
All that kind of thing. So at the end of the day, we'll sit down with them and say, okay, first let's see your job, what your goals are. Are you flexible in moving somewhere else? Because not everyone's going to be able to buy where they live, especially in today's market. It's difficult because, like we said, there's people that can make $100,000 a year that don't have any student loan debts, that don't have credit card debts, but the average home in their area is $800,000. And maybe there's only 5 homes for sale and that price is driven up to $900,000. So the competition aspect of the market right now,
it's really hard.
It's intimidating, especially for a first-time home buyer. And these first-time home buyers are also having to contend with crazy high rents. Now, what was the incentive before of renting an apartment or renting a bedroom? You could say, I'm going to save money. But now, because of the inflation that has come out of COVID, everything's crazy high, including rents.
No, and you're looking at a lot of people, especially millennials and everything, with one of your friends who's a software engineer, who he's been in the industry 5 years and he's still struggling to acquire the assets to be able to purchase his first house. So everybody's focused on, the big Orange County and LA County, but are house prices this ridiculous all throughout California, or is it just these two, metropolitan huge areas that we're focused on?
California as a whole is a very desirable state to live in, as you know.
Of course.
The weather is second to none. The job opportunities here are a lot higher than other states.
Cost of living,
So as much as people want to talk about how many people are leaving the state, there's always people coming into California. So the rate of people coming in versus the rate of people leaving, it's a very small difference. You're never going to notice it.
Yeah.
So if you're in California and you're looking to stay in state, but get something more affordable, if you're in SoCal, Riverside County, San Bernardino County, Imperial counties, you're going to find something a lot cheaper than LA and OC. If you're willing to move to the Central Valley, cities from Bakersfield, Fresno, Visalia, Merced, that area is a lot more conducive for first-time home buyers.
Okay.
But of course, you need that flexibility in your job, and we go back to the case-by-case basis. Everyone's different, and that's where we come in and we help you figure out your specific puzzle.
So, and you know, one of the last things I wanted to touch on, what's a packet of information that you would ask of me? You know, if I'm looking to go and start this initial process, what would I need what do you need from me?
Well, I would tell you to go on our website where you fill in your basic information, you know, your name, your address, and then from there on a secure internet connection, you upload your taxes, personal taxes, 1040s. If you're a business owner, your business taxes for the last couple of years. If you're a W-2 employee, your W-2 for the last 2 years, last 2 months of bank statements, last 2 pay stubs. We run your credit. We also look at your driver's license just to verify your identity, social security card. You upload these, and that pretty much gives us the essential of what we need to provide you with an approval and give you an idea of what you qualify for. That's on the mortgage end.
Perfect. And how long would you say this entire process would run?
Everybody's different. Now, there's clients I've seen that from the moment they fill out the 1003 application, which is your basic loan application, to closing of the loan, it could be as fast as 3 weeks.
Really? Okay.
You know, their credit score is high. They almost owe no money, maybe have 1 car payment, that's it. And they can get approved relatively quickly. Now there's other clients who, you know, you're looking at a lower credit score, they have student loans, they have medical debts, they have revolving balances like credit cards. That takes a little longer because you have to work some things out, you have to get your ratios, your DTI, everything in order. But it depends. If we're working together, and that's why Velez & Sons aims to, you know, provide the best service so that your process can be as speedy as possible.
Perfect. All right, well, JC, you know, I appreciate the time. And again, you know, this is the inaugural episode of Velez & Sons podcast, which is also going to be available in English and in Spanish.
That's right.
You know, being that we live in a greatly Hispanic community and we want to serve all the different types of people that we can work with. So, you know, I had a great time.
Appreciate it.
Thank you guys for your time.